Hello everyone, welcome to today's edition of the SPY review. Um, I did make a SPY trade earlier this morning. Ended up pretty much breaking even on it. Yesterday I said we didn't have too many opportunities to get in any SPY trades because it pretty much ran straight up right out of the gate and never really pulled back to give a decent entry, at least for my liking. Today is a little bit different. We had a few opportunities today. It's about 2:20, so we still have time left in the day, so that, you might see something come up later on. My first entry was at 9:53. I bought calls. Would have been just after the open of this candle here, and I bought it off the bullish engulfing candle here, and we broke back above, pretty much held this 200 simple moving average. So I got in here at 9:53. Figure, I don't know, it was probably right in this area here. I paid $1.18. I think it made it to $1.28. I had a sell order in at $1.30 to sell the first part, and it made it to $1.28 and didn't trigger, and then it pulled back, and I sold approximately right here for $1.19. So I paid $1.18, sold them for $1.19, pretty much a break even. So that one didn't work out. Like I said, I had my sell order in, and it just missed hitting it right here, or actually right here. Just missed triggering it. That's the way it goes, and it didn't spend it spent a little bit of time here. I guess I probably could have lowered my sell order just a little bit, but I was looking to get back up to today's open. I thought we would get there, which we actually did here. But when we got down to here, I didn't really like the price action, and we started to lose this 100, and at that point I kind of figured we were going to drop further, so I went ahead and sold, got out at market. And good thing I did, because it pulled back to here, and I wouldn't have held through. I probably wouldn't have held through this. I shouldn't say I wouldn't have. I don't really know how much I would have been down. I know this would have been a level I would have been watching, but I don't think I would have held through here anyway, so that would probably end up being a loss. As it stands, it was pretty much a break-even trade. I might be down a couple bucks because of commissions, but so we had that one there that you could have made, probably still could have got 7 or 8% on it, because like I said, and you could have got a better entry than me. I didn't get in until it was up to about here. An entry on a proper entry would have been about here. I didn't get in until it was closer to about here. And if you wait till it pulls back to here, you would have got a better entry, because you would have entered here. And although you would have lost some of that on the way down here, you would have got it back when it popped back up. But you don't know that kind of, what's going to happen. Here's another bullish engulfing candle. And this wouldn't have been a bad one based off the chart, because we broke above the 100 and above today's open on that bullish engulfing. The problem is, this candle is so big, by the time the candle closes, you're way up here. Your risk reward is awful. So that wouldn't have been a good entry just because of risk reward. You could have probably said the same thing about this one, because I entered here knowing that today we had the 100 in the close right here. But I don't know. I just thought it was going to go higher today, so that's why I got in. And I went in light enough. So really, this entry wasn't really that much better than what this one would have been. We did have yesterday's high right here. We had today's open right here. So probably not the best risk reward on that one either. You come down here. This isn't technically a bearish engulfing candle, because if you look at the close here, we closed at 285.86. This one opened at 285.86. I'm guessing it didn't flag it because it has to be just slightly higher than the open of this candle has to be slightly higher than the close of this one. But it's a large green candle followed by an even bigger red candle. in some cases you can justify something not being a strict criteria candle, and I think this is one of those cases. When you have a large green candle followed by an even bigger red candle, I think that's justification enough. So your entry would have been roughly here, and I probably would have put a stop out, a close above the 200 here. But look what you would have got here. That would have been a nice run. Probably would have got out of most of it right here at this pivot. Maybe held one or two contracts down to here, or down to somewhere down here. Probably after they saw this start, probably after this long. Maybe not this one, because this was kind of a spinning top. So we had a long wick and a long tail, but this one here was more of a long tail. It's probably sometime in this candle I would have got out, whatever I had left. Here's another bullish engulfing. You see the close here was 285.21. The open here was 285.20. This was a true bullish engulfing. The problem with it is your risk reward, because it closed all the way up here, and you remember from a technical standpoint, a stop out on an engulfing candle is the high or the low of the pair that make up that candle, that engulfing. So your stop out would be a close below 285.09. When this candle closed at 285.45, that's a big range there to stop out. However, this next candle popped above the pivot. I would have considered this as an entry here to go puts, or to go calls. Once we broke above this pivot and have a stop below, probably below the close of this candle, which would be below this pivot. So if we would have closed down in here, had a candle close down in here, that would have been my stop out. An entry would have been right here with a target, a minimum initial target of the 200 right here, which would have been a really good risk reward, and you would have hit your target. I didn't trade that one. Actually, I think I was in a meeting this morning and then I went to lunch, so I probably wasn't even paying attention to this chart at that time. Another one here. This isn't quite a piercing line. A piercing line, this candle has to close at least halfway through this candle. But we did bounce right off a pivot. It was a nice bounce. I don't know that I would have traded that, but it could have been a nice play. You could probably justify entering maybe halfway below, midway of this candle, which you would have got close to it right here. So if you would have entered here, and it's kind of, I guess you maybe kind of call that a voodoo magic. You don't really know. You're kind of, I don't want to say grasping at straws, but if you wait till it pulls back, how do you know where it's going to pull back to? The obvious point would be here. If you got to pull back to here, that might be an entry to go ahead and enter based off of this candle holding this line. And if this one held this, next one held this line. But we didn't actually come down to this line. We did have a double bottom right here. So that 285.54 looked like it was holding decently, and we actually had the same levels over here. So you could have, if you were paying close enough attention, you might have been able to catch that. What I did trade today, another one I did trade, was Twitter, and I played Twitter calls off a bullish engulfing candle. My entry was at 1236.58, so 1237 I got in, which was right at the right after this candle opened. Shortly after this candle opened, I got in. We had the bullish engulfing off of today's open. We also had the 100 simple moving average line. I based my entry off of that with a target up to at least here. The top of this candle was my target. So I got in right about here. I sold a third. I paid 80 cents. I sold a third at 86 cents at 114, which would have been, oops, I got it over here. So 114, would have been pretty much the end of this candle. I got out of one. I sold one of my contracts. I sold the second one, not really any real reason other than I just wanted to reduce a little bit of risk. So I got out of one. It was probably about an 8-9% profit. I got out of my second one at 119 at 90 cents. So 119 would have been right at the close of this candle, and I got out of this one because we were just hitting yesterday's high. Just kind of hitting yesterday's high. Plus we had this, and the candle hadn't quite closed yet. I was afraid we were going to get a little pop above it and then pull back, so I went ahead and sold a second one here. I sold the last one at 13:26, so 7 minutes later, which would have been right after this candle opened. I sold the last one at 91 cents, so my net was about 11.1% profit, and I'll take that all day, any day. So I made 11%. I didn't know that it was going to go all the way up here, obviously, or I would have held all of them and sold them all up here. But that was pretty much my trade on here. Bullish engulfing candle that held today's open, and for the most part held the 100 simple moving average. I jumped in right after this candle closed, shortly after this candle opened. I was down slightly here. I paid 80. I don't know what it went down to. Not sure. I wasn't down a lot. I think it went down to 75 or something. I don't know. Didn't really watch it. I just know I was watching this level here for a stop out. Close below here would have been my stop. But like I said, my target was up here, so my risk reward was good, and I held the last contract to the second one just after this, and the third one right about at yesterday's high. So I hit my target. Didn't get my target on the first one, but my goal was to get 10% net, and I did. Just slightly over, so that worked out. Let's take a look at some other charts, and other entries here. This would have, obviously we had a bearish engulfing candle here, but it was such a big candle. Yeah, it was near yesterday's high, but by the time it closed, we're way down here. You could have entered here, entered puts with a stop, with a close above the close of this candle maybe, and your target would have been down here to 200. So that one would have worked out for you. Here we have another bearish engulfing. The problem is this one didn't work out. You could have entered this one with a stop above. Now, a technical stop would be above this, but you could have called this 200 or the 100-year stop. Depends on your risk tolerance. So yeah, there were a few different possibilities there with Twitter today. Just go through I haven't looked at these charts yet today, so I don't know what we're going to see. This is pretty much going through my watch list. Same thing here, bearish engulfing, but it was such a big candle that it's hard to play those big candles. Maribozu, it was almost a bearish engulfing Maribozu. Right here we had bullish Hotomy. Nothing really stands out. This pivot here might not have been too bad to get in on, but you would have been down right here. Kind of hard to really point out an entry here other than this long tail, and then entered on this candle. Maybe entered at the close of this candle with a stop below this pivot, and your target would have been up here, at least your initial target. Not a whole lot else to look at on that one. Let's try Tesla. Tesla's a tough one. I've had nice wins on it, but I've had some. The thing I don't like about Tesla is the spread is usually so big that if you buy it and you have to stop out right away, you're pretty much looking at an automatic 5% loss just because of the spread. Maybe even a 10% loss. That's why I kind of quit trading it. If you get in and you stop out instantly, you're looking at a 10% loss, or 5% at least. So it makes it a little bit tougher to trade that one. We had a bearish engulfing here. This wouldn't have been too bad because it was bearish engulfing right at a pivot and at the 200. So yeah, that 200. So we had a bearish engulfing right at a pivot and right at the 200. That would have been a good entry. I may have went ahead and entered this one had I been watching this chart. My target probably would have been down here, or at least this candle. The bottom of this candle would have been at a minimum. This would have been my target. My stop out would have been a close above this. So this would have worked out well. We also had a bounce off of this pivot. However, we didn't really have a reversal candle. We have a spinning top here. And with a spinning top, you need confirmation. This is your confirmation candle. But your entry would have been right about here with a stop out probably down here. And your target would have been initially here because of this candle, but probably closer to here. So you would have had a little bit better than the 1-to-1 target. Yeah, maybe 2-to-1. So that could have worked out for you, but if we had a doji here, it would have made it a little bit better for me. I wouldn't have traded this because I know how Tesla is and what I mentioned earlier. So for me, I wouldn't have traded this, but somebody that's a little bit more aggressive, they could have had a good entry here. Let's take a look at another one. Etsy. Let's see what we have with Etsy here. Not a lot. We had a bearish engulfing here, but it's kind of at support with not really a defined target. Maybe pre-market lows, but it looked like it was kind of on the uptrend, so you probably wouldn't have wanted to go short on it anyway. So you're probably looking at calls. You had a bullish engulfing here. That's actually a Maribozu. It's not a bullish engulfing, it's a Maribozu, but look where it closed. I mean, you're already way up here, so can't really, can't justify an entry on that. This one here, we have a bullish engulfing. This one here, you could have possibly played it once it broke through here with a target up here and a stop below this, but it wouldn't have worked. And you remember, we can't see any of this. We don't know what any of this is after this, so we don't know. It could have popped above here and it could have ran way up to $75 today. We don't know that, at least at this point. But based on the risk reward, I probably wouldn't have traded this one. If I was aggressive, I might have made an entry here after this candle closed. I don't like the longer wick, but I would have possibly played an entry here with a stop below this pivot. Ultimately, I would have stopped out of it. It wouldn't have worked. Over here, we had a doji, and then we had a Maribozu. Maribozu engulfing. So we had a Maribozu engulfing following a doji with a pop above a pivot. That would have been a pretty good entry. That wouldn't have been a bad one to get in right here. Your entry would have been about here. I would have probably played a stop below this pivot with a target close to here. Now obviously we wouldn't, and this is why I scale out. This is why I sell part of it on the way up, because my target would have been probably closer to 69.90. Considering the pivot, it's a 69.97, and we only actually hit 69.88, so we wouldn't have quite hit my target. My target would have been this pivot, but I always sell a few cents short just to be a little bit more conservative, but we probably wouldn't have even hit my sell, so that's why I try to scale out. I'll sell one at maybe 8% profit. That way, if it comes up here and I end up getting out of the second one here, I've locked in a little bit of profit already. It makes it a little bit easier when you can scale out like that. I have Disney on my list, but I don't like trading it. But we'll take a look at it. Disney seems to be very similar to SPY. The charts are pretty similar. Had a bearish engulfing right at the open, so it wouldn't have been. You could have entered here, entered puts here. Maybe wait till we got below this support level and entered puts with the target here, initial target at least. You could have made out pretty good on that one. Here we have a doji. It's also going to be a bullish harmony with a doji. So, yeah, you probably could have. If you would have got in here, you could have. I don't think you could have got 10% there, maybe 5. You know, the risk reward was there because your stop out is below this pivot. Your target would have been up here, but it just didn't. I mean, it did work if you wanted to hold it all the way to here, but initially it didn't. It wouldn't have worked out. We had a bearish engulfing here. Not really any resistance to speak of, but we do have a bearish engulfing. Target would have been down here. Your stop out would have been here. Problem is you would have entered about here to close this candle, or you could have waited till it came up here. Now your risk reward is skewed. Actually, your target would have been here because of the pivot, initial target at least. So that wouldn't have quite worked. Bullish engulfing here, and we broke above the 200. That would have been a good entry. That's kind of similar to what I did with the Twitter entry. So this would have been a good entry. Stop out would have been down here. Your initial target would have been the pivot. Your risk reward wouldn't have been fantastic. Probably about 1 to 1. But yeah, nice support here as well as support here. So this would have been, this probably would have been a decent entry. I'd probably rate this a 6 out of 10 on a scale. If I had to rate a scale of what my entries would be, I'd probably rate this a 6 out of 10. Not the best, but not bad. And again, I'm pretty conservative with my trading. So another entry here. We had another bullish engulfing, kind of off of support. We didn't quite come down and touch it, but we were close. This would have been a nice entry here. Target would have been up here, and you see we came right up and pretty much touched that target. We were just short of that target by maybe a penny. You can see it didn't quite, maybe it did touch it, but that's why I sell just a couple pennies before resistance or before support if I'm in puts. Same here, bearish engulfing. Stop out would have been up here. Your target would have been here, so risk reward wouldn't have been very good. However, if we lose this pivot, it might not be a bad trade. Your initial support level would be here, and then down here, and I'm getting these from these candles. And after that, your support's way down here, just double. It pretty much a tweezer bottom. So that's Disney. I'm not going to go through all of these just because it would take too much time. I have about 10 on my list. Baidu. Here's a good one. See, we had it's pretty much a spinning top up here at resistance, followed by a bearish engulfing. Your stop out would have been a close above this candle, which would pretty much coincide with the close above this pivot, and your target would have been here. So your entry would have been pretty much the opening of this candle, which would have been here. So your stop out is only this much. However, your target, your reward is all the way down here. So this would have been a nice risk reward. That would have been a good entry. Get out of at least most of it right here. Maybe hold one contract to see if we can pull down to here, which we ended up doing. So that's another possibility. Like I said, I'm not going to go through all these, but you get the picture. A lot of entries, a lot of possibilities today. That's the only ones I traded. Go back and look at Twitter again and see how it's doing. This is the one. This is the one. Like I said, I was in calls on it earlier. It would still be in play if I was still in it. I'd still be still be doing good. I'd look for a target up here at this point if I was still in it. However, I would have sold out of most of it by now, and actually I did. So, if you're a little bit more aggressive, wanted to hold longer, looking for a bigger gain, I'd say right now your target would be up here. Today's high, which is pretty much at this pivot here. So, go back to the SPY chart. I called it this morning in the Traders Council chat room. We kind of joke in there. Davis will ask me what we're going to do today, and usually I say, well, if we go higher, we'll be green. If we go lower, we'll be red. Kind of a joke, but I did say this morning I thought we'd be green, but mostly flat. So I pretty much thought we'd have a flat day, but close on the green side of it. We're pretty much there. You see the ES futures is up 75 cents for the day, so we're pretty much at even right now. Yesterday's close was right here at this purple line. We're not that much above it. Today's open was right here, slightly below it. So I kind of thought we'd have a flat day, just because of the big run yesterday. The last couple of days we had some pretty good sized runs, and I just didn't, just running out of energy, and we just needed a cool down period, a little bit of consolidation, or maybe even a slight pullback. You see today we're looking at hanging man candle, which is typically bearish. It's not a strong bearish candle, but it is a bearish candle. I like to see confirmation on a hanging man. I wouldn't jump into puts and hold them overnight just because of a hanging man candle. But if we open tomorrow below today's close, then I would look for a pullback tomorrow down to the 284.30s at the beginning of this gap, at a minimum 284.30s. Obviously the first support level will be today's low, which is 285.09. After that, 284.39 I think would be the next one, and I think that would hold a little bit of support. And if we lose that, then we have this gap all the way down at 282.85. I don't think we pull back that far, but at least not tomorrow. I don't think we pull back that far at all. At least before we hit, I think we hit 290s before we hit 282. But unless there's bad news, news trumps charts. So usually, news trumps charts. So if bad news comes out, yeah, we could definitely see that 282 range. But without any bad news, I think we hit 290 before we fill that gap. So I think that's about it for today. I kept you on here long enough. I know I'm pretty boring, but I like to cover these. I hope it's helpful. I hope it helps somebody. If you like it, give it a thumbs up, and I'm going to try to keep doing these either way, whether people watch them or not, just because it just helps me just reviewing charts every day. It keeps my mind in it. So yeah, give it a thumbs up so I know that you're watching and liking it, and keep it up. But that's it for today. I'm probably done trading. I don't think I'll get into anything else. I still have some funds available, but I could say I'm 2 for 2 today, just because I sold my SPY calls for a penny more than I paid for them. Ultimately, it was probably a minor loss with fees, but we'll call it a win, just because I'd rather not call it a break even. Technically, it was a win, and Twitter was a win. So I didn't make any trades yesterday. Made those 2 today. I didn't make any paper trades today. So that's it. Good trading. Give me a thumbs up. Any comments or questions, suggestions, put them in the comment box, and we'll see what we can do. All right, talk to you later. Bye.